Good evening, everybody. Welcome to tonight. Tonight's topic is voids and other confusing topics. Tonight, I'm going to be talking a little less, and you're going to be typing a little bit more, probably. Tonight, I had put on the email that this is going to be more of an educational event than usual. I think they're all fairly educational. But somebody asked me a while back, said, hey, you do all these great presentations and really learn a lot from them, etc. But could you really do a good one on support and resistance? And I said back, well, you know what? Here's the problem. And I think everybody knows this. You guys are all smart people. And I think you hope, from what I've heard from all of you, you appreciate me in the sense that I really try to provide a lot of great information for you guys. But I'm very upfront about it. Been around forever, doing this for fun. And I made it clear that, you're not going to learn everything by just attending these. I think you all know that. And I understand that. That's why I have the biggest, most intense free stuff page around to help those of you trying to do what you can on your own. But I look at it more as this. In a way, I almost feel guilty sometimes because if you try and learn from the trade of the day videos and this and that, you're never really going to learn it. And for a while, I always felt guilty about even offering that because it's a false sense of hope. But what somebody explained to me one time was that they, use that as a prerequisite. They started learning there, and they got a good base, questions, and a better understanding. So when they did finally take the classes, they really caught on better, and I thought that was a good thing. And the truth of it is, everybody wants to try it on their own, right? I tried it on my own, right? You know that story. I mean, I think I've told it before. I don't want to bore you, but I felt I was, at least in that 50% range of intelligence, not the sharpest tool in the shed, but I could fight my way out of a paper bag, and I figured, hey, I can learn this, and you know what? I'm glad I tried because otherwise I always probably would have felt I could have, but the best thing I ever did was get the education I did, which was quite honestly very meager, very not much. So the problem today was I having this conversation with you, Efren? Was that you? It might have been you. It was a name like yours. Sounds familiar. But, so what I said was, look, there's just kind of a line of how far I can go. Well, it's not you then, or you know. There's just kind of a line of how far I can go in a free event. Because number one, I'm not trying to teach the seminars. You guys know that seminars are 3 classes in a row, and I tell you quite honestly on the webpage, if you go to the homepage, and we're going to get going with this, don't worry, but I just want a little intro to this one. I tell you quite honestly, I don't think you can even pretend to know how to trade until you've been through the classes at least twice and honestly 3 times. That's just the way it is. I can't help that. I'm just telling you the truth. And this is something that's been on the site since the day I opened DTS, which is now over 2 years ago. Just go to the bottom of the homepage. It's called the warning section. And it's just an upfront answer to the question, what does it take to learn this? It doesn't take a lot, but it takes more than most people think. And you get in this thing with support and resistance, this becomes a very in-depth topic to really learn it, right? Yeah, you're right, Efren. I mean, I think I've always touted that 3 times is what you need to get to that 85% level. And, something else that I've said is, well, people have said to me, well, Paul, it'll take me a long time to get to your level. And I'm like, well, you don't have to, though. See, you need to know 95% to 100% of what you want to do. Not everything in technical analysis, not everything in the market. As a matter of fact, I specifically teach you so many things you shouldn't ever try to learn or understand. You want to find your little niche of what you want to do and then attack it and then become an expert at that one little thing. So after 2 times through the seminar, then you focus on what you're doing. And I have so many people that have done that. I have so many people that I'm very happy and proud that, are just swearing by me and, doing a good job with what they're doing. And I really, really like that. But we get to a thing like this, tonight's topic. Voids, and for those of you who don't even know, void it's in the category of support and resistance, and it becomes kind of an advanced topic. And I said, what the heck? Let me just teach this because this actually is not a bad topic. You know why? Because a lot of tonight is kind of what is wrong or what you don't do or the wrong way people look at things. A couple of you, in the last month, I've had this conversation with 3 people. So it wasn't necessarily because of you. Don't think that this topic has been something I've wrestled with students and non-students for years because it's one of those terribly misunderstood things. Because quite honestly, it has been taught incorrectly. It just simply has. A lack of total understanding of what this topic is. I think you're going to love tonight because we're really going to get into some stuff. But I do want you to please understand, and please don't hold it against me, that at some point I have to draw the line and say, okay, now that's as far as we're going down this road. Because to give you a false sense that you understand the whole thing is not good either. It's a long time to get this whole topic. It's not rocket science, no, it's not that hard, but you do have to go through the whole thing. But I think this is a great topic to break into. So let's get into this. And like I said, you are going to actually, let me get my little red, you do have slides up, right? You can see slides. And in a second, you'll see a little red rubber ball. Lobster Thermidor. I don't think that's your name. I'm just saying, don't want to insult anybody. I don't think that's your real name. I think you made that name up. I'm not sure. You can see the little red ball, guys, in slides. All good to go? Voids, discussion points. This will be an educational class trying to clear up some of the misunderstood concepts in technical analysis. Over time, I have received tons of emails that can easily pick up some of the top subjects for people, stop people from making money. It's not hard for me to hit topics. I mean, sometimes there are topics I know that are just, okay, clearly this is a confusing topic. And sometimes, I just get emails from people and everybody's like, and I'm just like, this is just wrong. And you get the same wrong thing from like 10 people in 6 or 8 weeks. And you're like, well, somebody's doing something wrong out there because there's just this misconception out there. And as we go through this, I want to point out, like anything I talk about, this is not a matter of opinion. When I cross into the opinion category, I'll tell you, everything I'm going to tell you tonight and teach you is unquestionably factual. You can look at the charts and I'll prove it to you. Just like when I talk about news, I mean, it's just factual how it is, and I prove it to you. It's not just a matter of my opinion. So time for you guys to get typing a little bit. And part of this will be also maybe me getting a better picture of where some of you are in terms of what you're trying to do. I know I have people here that are seminar students with me and people that are brand new, maybe their first week with DTS. But let me ask you this question. In trading terms, what is it a void? I want to give you like 2 minutes, literally, to answer this question. What is a void to you in trading terms? And if you're not sure how to answer, I mean, if you know kind of what it is, but you know how to phrase it, well, just tell me, is it good or bad? Do you have to have one? Do you never want one? Would you like to have one? What does a void mean to you in trading terms? It is a concept that is constantly tossed about. Okay, Jerry, an area of free bars to the left. Okay, there's a good start. Let's keep going. I want to see like 50. And if I had this conversation with you recently, don't ruin it for people. An area in trouble, a little trading volume occurred. That's interesting. That's a different take on it than I've heard before. Little trading volume. Okay, so in your definition, Stephen, you don't care what bars are there or what the bars look like. If they're low volume, that would be a void to you. And I'm just trying to clarify. I'm not trying to put words in your mouth, but let me know and give you a chance to rebut it here. Leo, an untraded area that price jumps over. Okay, a gap between the bid and the ask. Okay. All right, Ray. You are. Let me just clarify that. You are correct. The gap between, but that's not the one we're talking about in this case, Ray. That is a void in terms of entering, and it creates a micro void on the chart maybe. But we're talking about on a chart when we're discussing about whether or not you want to take a trade, whether or not there's support or resistance there that could help or hurt you. And there's this common expression that people want to look for a void. So I want to know what it is. I'm asking you what it is. An area where there's no support or resistance. Okay, Eric. So Eric, does that mean we would have to be at a new all-time high or all-time low to be free of support or resistance? Is that what that means, the question to you? Marty, the distance between support and resistance. So it's just a measurement, Marty, the distance? It doesn't matter what's in between support and resistance. It could be anything there. It's just a measurement. Andres, on the chart offers no resistance to movement. Stock is free to flow. Okay, Andre, so it's kind of a circular answer though. What is it about the chart that would offer no resistance? Oh, you're right, that is a void. So let me ask you the next question then. If that's a void, an area of no resistance, what is resistance to you then? Voids are great, looking for low volume with big bars, okay? Interesting, open area with no trades. Yeah, Ray, what you said was the spread, but that's not what we're here to discuss today. You're right. I mean, there's a lot of meanings of the word void. Alfred, a prospective profitable space between the entry and the exit. Okay, well, that definition just means it's the distance your trade went in hindsight. I'm not sure that's, and I'm not trying to pick on any answers. I'm just trying to make you guys think. And Kimberly, not overlapping bars in an area, smooth, continuous previous. Okay, Kimberly, so that's good. So you're really getting more specific with the exact concept of a retracement or pullback in an area, what it should look like. Also, big moves in the void. Eric, no to whatever I said. Single print volume area. We'll know in 1 hour. Expected. What does it happen when many people change their minds, resulting in serious void? No, 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 Bill. Yeah, I'm sorry. For some of you that are completely new or lost, we're talking about the general concept we're on is on a chart. When we're looking at a chart pattern, a daily chart, weekly chart, intraday chart, doesn't matter. And we're trying to decide if our strategy would require an area to the left where the price bars are looking a certain way. And I'm going to get into it. You'll get it. Hey, Jackson, I have no idea. Me either. Okay, all right. So some of you have maybe never heard the topic before. Mario, how you doing? And for some of you, a very specific concepts. And I think if you're new, this will be interesting. If you have an answer, you may be shocked. You may be almost mad at me. But here, let me get right to the issue here. Let's take a vote here. 3 identical uptrends. Okay, up to here, boom, boom, boom. 3 identical uptrends. And this is I'm going to show you real charts in a minute. I'm going to show you real charts in a minute. But this is specifically this way so that we cannot argue about the only distinction here is going to be the pullbacks here. So what we're looking at here, number 1, there's that pullback. Number 2, there's that pullback. And number 3, there's that pullback. Okay. So my question to you that I want you to vote on, and I'm going to give you plenty of time to answer this because I want you to think about it, is if I want to go long coming off this area, boom, 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 which one of these do I want? Which would I want? If I want to be long, if I want to get above this prior high as quickly as possible, which one of these do I want? Which offers based, and the only difference here are these pullbacks. So which one of those would I want, and which is the best? I'm going to give you like, I don't know, 30 seconds to answer. Da, 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 da. Okay, so nobody said, oh, okay, Jack said, I was just going to say, Jack, nobody said 3, and there goes Jack with 3. Okay, so we have a pretty good split between 1s and 2s, ironically. Start off with 1s, and then I think some of you that sounded really intelligent put some 2s out there, and a lot of people are following throughs on the 2s. Oh, Gary said 3 also. Okay, interesting. All right. Let me ask you, let me put an asterisk here, stop typing. Let me ask you the other question. Which is the worst? Which would offer the most resistance, most likely to have sellers raining down upon us? Yeah, that's going to be an interesting conversation, I think. All right, before I give you the answers, and in this case it's, I often say my opinion, in this case it is the answer, let me ask you some more questions here. When you say there's resistance, right, when we're looking to the left here, you're obviously trying to pick the one that has the least resistance. And that, for those of you who are wondering what the word void means, in a sense, I guess, the people that use the word void would say it means the path of least resistance, right, everybody? So I asked you which was the best long, and which in a sense would be, it's the path of least resistance, right? Whoops, wrong way there. So what exactly does resistance mean, everybody? I want you to really think about this because, we all get, wherever we got our technical learning, whether it's books, videos, education, from me, not from me, whatever it was, it's funny how sometimes we just get words or impressions in our brain and we're not even sure what they mean. Think about it. What does resistance mean in terms of on a chart pattern? All 3 on minor support, wait for a trigger. Well, yeah, Alfred, we know they're all the same, right? All these charts are the same. The question was, because the pullbacks were different. So what does it mean? We're looking for one with the least resistance. What does it mean to have resistance? Sellers if you are long. Okay. Thick with passive orders. You mean on the level 2 screen, D? You're talking about literally orders on the level 2 screen? Because I mean, that is not what we're talking about, and also not only not what we're talking about, but it also isn't even true. I mean, the level 2 screen, other than the inside bid and offer, is all made up numbers. It's all garbage. Or it can be all garbage. A lot of it's garbage. Sellers, 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 sellers. Clusters, ceiling, resistance, sellers, offers. Okay. Well, when we say resistance, people typically, sometimes they'll say, oh, it means there's supply there. Okay, but Supply is not the answer because it's the same word. Resistance is supply, support is demand. So there's resistance. What does that mean? So most of you said sellers. Okay, good, right? Sellers. But what does it mean when I say there's sellers there? Why are there sellers there? Why are there sellers? You ever think about that? Why are there sellers? Price is high enough to sell. Okay, but coming back after the pullback, we're here, right? We're here and we're saying which price pattern is going to get us out of here the quickest. And if you're saying whatever one you're picking, the one you like the least, right? The one you like the least, your answer has to be because there's the most resistance there, i.e. the most sellers. Why are there sellers there? Either want to take profit or to get out even. Okay, because buyers got trapped. Okay, buyers got trapped. Buyers in the red. Okay, good. Number two, sharp bench rejection resistance level to me. Okay. Yeah, but Julie, I mean, you're just using alternate words to not answer the question. No offense. But I mean, I really want you to get to the heart of it. We look at a chart and somebody says to you, oh, there's resistance here. I want you to know what it means. See, what I try and teach people is the language of charts. In other words, you look at a chart, you understand what's going on. Not just somebody told me there's resistance there. Why is there actually resistance there? Yeah, there's a red bar there, right? Okay, trap, 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 trap. I'm sorry, Joe. I didn't mean to offend. I'm just saying, you're using another technical term to answer a technical term. I want you to really get down and think about it. What does it mean we have sellers here? Prices move down because at some point there become more potential sellers and more potential buyers because of where you are on a chart. Remember, every penny you take higher, you're increasing the price for maybe somebody doesn't want to buy it that used to want to buy it, and you're increasing profit for people who are long. So every penny you move up, you're increasing people who may want to sell it, right? There's always that balance. It's a balance between people that want to buy and people that have to buy to get out of a short. It's a balance between the people that want to sell to take profit and people that want to sell to short or that have to sell. So what I was getting here, most of you got the right answer, is that in a sense, when you say there are sellers there, why are there sellers here? It's because there are people that either want to take profit or that wanted to take profit and didn't take profit. In other words, if you've been trading before, tell me if this is true or not. If you've been trading before and you're in a long, let's say, and you come into some area that you're thinking, okay, this is pretty good profit, I really want to sell. And all of a sudden, bam, it kind of gets hit back. Don't you absolutely want to kind of get back out at that high? Isn't that true, everybody? If you're up $700 and now you're down to 500, right? Isn't it like just a psychological imperative that I feel like a loser making 400 bucks because I was up 700, right? So this is what creates this thing, is that when you get whacked back, people kind of get stuck. They wanted to sell and oh, they got stuck. Okay. Well, I didn't go through these reasons yet so I didn't even tell you my answers yet, Bill, at all. So here we have what we would call a nice orderly pullback, right? Here we have a very sharp, sudden pullback that many people would interpret as a void. In other words, you look to your left and there's a free fall. That is the typical void pattern. And this is what we call a choppy pullback. Okay? Now, this, I know some of you are going to get upset by my answer, but there's nothing to discuss. I mean, I hate saying those terms sometimes. The absolute best pullback to have is this one here. And let me explain why. It's because the people who are long and wanted to get out are able to get out. Click, click, click. In other words, you didn't all of a sudden get trapped, right? You didn't get stuck. You had the opportunity, and I don't care, it doesn't matter. This is a daily chart, a weekly chart, a 1 minute chart. It doesn't matter what it is. It's all relative. The point is that here was your all-time high, and you had all this time to decide, okay, all right, I'm happy, I'm happy, I'm happy. And you got out for $650 profit instead of 700. Everybody's good with that. Maybe 600. You put a stop at 595 profit. You know, the people who wanted to get out were allowed to get out. So when you hit an area where you've exhausted the people, remember, when you're moving up, and this is going to be a key thing we're going to talk about in a second, when you're moving up, a leisurely pullback, you can call it that. I call it a controlled pullback, a clean pullback. They're all those terms that mean very simply, it's like, okay, everybody, we're all on board, let's go. And then you reach a certain area, like the train reaches the station, and everybody says, okay, who wants to get off? I'll get off, I'll get off, I'll get off. And then you reach this point where the people who wanted to get off. Now remember, there are always two types of sellers, okay? There's the people who made profit on the way up, right? They want to take profit. Those are profit takers. Those are good type of sellers because they're on board with us. They're all with us. They're saying, yes, let's go up. And then some of the people say, you know what? I'm a little skittish. Give me some money. We say, okay, you can have some money. Go ahead. And when all those little people are done taking their little profits, you know what we say? We say, boom, there's nobody left to stop us. Let's keep going. But there's a second type of seller. Where's that second type of seller live? Well, he lives off the chart here. We don't see him. This is from an area from 2 months ago, 2 hours ago, 2 weeks ago, whatever it is. And these are people that got burned for some reason. And they're saying, boy, you rally again, and I'm going to get my profits back or, minimize my loss from last hour, last week, last month, whatever it is. So remember, there's those two types of people all the time. So that is the ultimate pullback because nobody is trapped and people who want to get out are able to get out. Now, the worst pullback of all, and hence actually the topic title for today, is this one. This is the worst pullback, period. Why? Because everyone was here and bam, all the buyers evacuated, the price dropped like a rock, and everybody is trapped. Everybody was up $700, now they're up $300. What's going to happen every time? No, not news, TJ. It happens all the time. What happens is like a switch flips. There's all these people. I got profit. I got profit. I got profit. Oh, please don't drop. Please don't drop. Please don't drop. And the whole world, and all of a sudden, bam, a stop triggers, another stop triggers, a trail stop, and it's a snowball effect. And bam, just this big rush comes down, and some people get out, but then all the other people are looking around saying, well, what about me? I'm down to $300 profit. Where's my money? And what happens is every time on the way up, you get whacked. Let me ask you this. If you think this is the best pattern to trade back into, let me ask you this. Even Technical Analysis 101, right out of the Cracker Jack box, it's true. What is a big red bar after a multiple bar run? Isn't a big red bar the most bearish thing you'd want to see? True? I mean, that's something you learn in Tech 101, and it's true. It's not one of those fake things, right? So how do you reconcile a big wide range bar being both the most bearish thing in the universe and the thing you want to trade back into? Any light bulbs for anybody? And it just comes about because somebody said one day, oh, well, a void is good. A void is not good. A void is not good. It's the trap people that are your problem. If GE was trading for 100 years, there's no area. Well, Joe, I'll get to that in a minute. Would you remind me about that in a second? But you're just kind of ahead of where we are right now. Well, naturally, yeah, all those things you consider in this. But in this one, believe it or not, is not the worst one. It's not the best one, but it's not the worst one. Because here, what we're doing here is people from up here that wanted to get out have been able to get out. As a matter of fact, that's the reason it keeps getting hit. The people who are trapped now are these people like here, the people that went long early. And they're not in a lot of pain. They're not having a lot of problems. So this is, while it's a choppy pattern, and it's usually not the favorite, on a good pullback, you'll get through this. It may be a little bumpy, but you'll get through it. This one here is usually the death. That's the end of it. You're done. Now, naturally, I'm comparing three absolutely equal chart patterns. And there is no question this is the least one that you want. Absolutely nothing to talk about. Now, naturally, if you just pull this out of context as a comparison, and you go anywhere on the planet and say, well, here's a red bar, does that mean it's the end of the move? Well, you have to take everything into consideration. Is it a brand new move that just started? All kinds of things. I'm just saying, though, but everything else being equal, this is the worst thing that you want to see, period. Okay? And I think we did these questions here, but okay, why are there sellers there? And people will say, well, on the chart. See, an answer I get a lot of times too is, well, when you look to your left and there's something there, you say, well, there's sellers there, and why are there sellers there? Well, because the chart is there. Well, that's a circular argument. And that's what we call self-fulfilling prophecy in a sense, is that if everyone looks to the left and we all think there's something there to sell, well, some people may sell and that may start a little snowball effect. And if that happens in an area that we that really is resistance, like if there really is stuff here that people are going to be selling, and you get a little self-fulfilling prophecy thing, it may start the real move down. But if you get a little self-fulfilling prophecy thing out in the middle of nowhere, those people will be wrong and the real buying will continue. I know that's probably a little above where we need to be right now, but why are there really sellers? That's what I just went through. A different term that you can use if you want is to say a tradable void. Nobody actually threw that term out there. Tradable void would mean a visual void, but one that then would follow a strategy. Does that make sense? In other words, a wide range bar after a big move up is a strategy to short, if anything, not to go back long again. So if you have some kind of strategy and then a visual void, that's great, but when do you have that? When do you have a strategy that would follow a totally puke out collapsing move to the downside? When would you have a long strategy that would follow a big puke out of people? Whoops. When would you have that? You know, there's strategies all over the place, right? But when would you have one that says, boy, here's this huge red bar, I'm going to go long? Exactly. Climactic is the only, and again, for those of you, I'm not teaching class here, but you know, climactic is that puke out move. And you know, even when I teach my class, I mean, you people that are there, you know, I'm very, very cautious about it because I think it is by far and away the most difficult strategy because you have very difficult entry, you have very difficult knowing exactly where it is, you have a limited target, there's all kinds of negatives. And the worst thing about it too is that most new traders are drawn to climactics because you get that kind of a hero worship thing. It's, you know, I got the low of blah, blah, blah for the day, I got the low for the year, and people chase these things and they're very difficult. But the climactic, the very definition of a climactic, the very nature of a climactic, already by 20-fold times over again goes above and beyond any requirement for a void. You don't need to say there's a void there. The definition of a climactic requires it. So the whole concept of even mentioning a void becomes almost a misnomer. There's almost no time you would ever do that. Matter of fact, in my classes, I don't use the word because I think it is nothing but confusing because people start looking at visual voids and thinking they're actual good things, and they're not most of the time. When you have it on a climactic, you don't need to define a visual void separately. And the only other time that you could have one, and I'll have some charts here, but I want to show you this real quick. The only other time that you would have, and I'll see your questions that I'll get in just a second, a tradable type void is if you had something going on, you collapsed, right? And then whatever happened, you came back and you created a strategic pattern here. And then when you went to play that pattern, if you like the pattern, you look and you go, oh, there's a void. But you know what? At what point does that strategy become more important than the resistance that's in a void? At what point does that happen? Now, let me kind of redraw that and go back and answer the question. So we have this collapse, and okay, boom. There's a strategy to you. Is that strategy now worth more in a bullish manner than the tremendous resistance that's going to be encountered in this void? At what point does that happen? And Joe, this is going to get to your question, really, right? Right, Stephen, seminar student, exactly. I mean, every bit you move up, you are taking away some of the sellers, and you're adding potentially some of the potential buyers. When does that happen, though? Well, where it happens is, see, everybody looks at a chart and says, oh, that's support, that's resistance. And I often have to say, well, why? Well, there's something to my left. We're going to talk about that in a minute. I go, well, so what? See, there's actually, what I teach is a 4-part test, in a sense, that goes and looks at 4 different things. And one of them, Joe, is what you said, was time. Isn't it true that time will erase sellers? I mean, if this drop happened 7 years ago, isn't it true that maybe some of those people just left town? They died, they don't care anymore, right? Isn't that true? And there's 3 other things that matter a lot. There's what happened since then, how you're attacking it now. There's these different things you have to look at, and it's this balancing you have to, like in all of trading. There is no, everyone wants to teach trading like this on-off switch. There's support, it's not that way. And that's why I like to call it the art of trading, the understanding and the fact that it is a balancing act all the time of what exactly is happening. And you have to try and evaluate and then we use other techniques too. We used the test, if you will, or you might want to call it what do you call it in an army where those guys go, the scouts, right? All right, let me take a look at your questions, then I'll go on to the next thing here. Take your strategy from higher time frame trade to smaller. Well, I'm not sure, Andres. I have to think about that one. Right, it's all probability, Joe Pepper. I mean, it's right. It's a balancing act, constantly analyzing what's going on. I don't want to make it sound complicated. It's not, but I think you can all appreciate and understand that there is no single definition to look to your left and say, oh, that will stop the pattern, that will support the pattern. It's not that simple. Boom, boom, and I just did this one here. Or you happen to have a nice strategy, and for some reason there's a void from a long time ago, rare. But when you do, then you do the supply demand test. That's what I was just talking about. That's one of the parts that I teach in class is understanding how to do an actual test to evaluate what resistance is actually there. So let me now take a chart from today. Now understand, this is not a trade. Oh, not part of my trading plan. Okay. This is not a trade from me because I'm showing you something bad, right? I always like to show you trade examples to prove things, but I'm showing you what not to do. So there is no trade. I took 6 or 7 seconds to find a chart to make my point, and that was it. So here's the question: OSTK, unquestionably a strong stock. We just went to new all-time highs. This is just from the last week or so, right? Here's the pullback, right? Do we go long here? It's a legit question. Strongest stock in America went to a brand new high, pulling back, and boy, there's a void, right? Isn't that what you call a void? Do we go long there? Yes, no? But why not? Maybe, maybe. Well, what would make your determination yes, no, maybe? There's support? Because you're right, there actually is probably the most key support area on the chart. But remember, there's always two things happening. I'm going to get to those in a minute. Well, what I want to point out is that this pattern will generate more selling than any other pattern in America. So my answer is I would never consider this long. And I mean never. 5-minute chart, 1-minute chart, daily chart. And hopefully, again, I'm not here teaching you a full seminar program class. I'm just showing you some stuff and saying it with conviction because after this amount of time, I have some conviction on stuff. And I'm just maybe opening your eyes. I mean, if you do this and you're having a hard time, this is the worst thing in the world you'd ever want to do. Because look at all these people. How many people buy these new highs? What's that with number 2? Right, it's the same thing. Well, this is number 2, right, Julie? This is a real life chart pattern of number 2, right? So it's the same answer. How many people just bought these new highs? And by the way, anybody buying this new high, by the way, is an idiot, right? Because that's the worst pattern you'd ever want to buy. But a lot of people do, right? And guess what happens? They no sooner get in, and guess what? They're killed. They're getting killed. Killed. When you're getting killed, on a swing trade, for example, when you're not eating dinner anymore because you're so sick, what do you want? What do you want? It's what makes techno analysis works, and it's what will make techno analysis work for the next 100 years. Yeah, you want some relief. You want to get your money back or get most of it back or something, right? Climactic volume also. What do you mean, Tony? Where? You mean on this bar, so we should go long? But what you want is you want to get some of your money back. So guess what happens? Anytime this bar starts to rally because of the support area, Julie, or wherever, guess what happens? Everybody in the woodwork comes out to sell. And you see, this is to me is the biggest misnomer in the world is that people think, oh, there's a void, there's no resistance. It's exactly the reverse. There's more resistance there than any place on planet Earth. Big volume bar on top, right? A climactic top, right? T, so you're saying this is a very bearish pattern, correct? Yeah, because big volume ends moves, so boom, there you go. So, okay, boom, we come down a little more. Go along here. Don't get bored, keep an eye on the chart. How about here? How about going long here? Now, if you liked it here, the old saying, if you liked it here, you gotta love it here. Topping tail? Where on this bar, there's no topping tail here. How about a 10? Oh, well, let me give you this one. Here's now. How about this? How about this? Yeah, but Joe, you don't want to accumulate shares on the way down. Who wants to accumulate shares at 22 when it's going to 10? You don't need to. I mean, be careful with the word accumulate. You really got to know what you're doing. Accumulate is very close, Joe, to averaging down. Accumulating is okay based on the specific definition. I know very few people that do it properly. Averaging down is a sin in trading. If you average down, you will be out of business, guaranteed. Don't even email me. Just hang it up and go sell shoes, whatever you're gonna do. 4 or 5 bars back. No, there's now there's a bicep. No, doji. Well, now we have a little tiny skinny bar, and what are we sitting on? Let it go sideways, make a higher pinch. Okay, so Dip's saying get some more information, and that's always a very smart answer, Dip. But what if it just blasts off? Do we want to get some here? Recently support, prior support? Is that support? Is it support? Even at support, support consists of two things, right? Support means that we have to have a point on the chart where there are more potential buyers and more potential sellers, right? And everybody looks at support as one dimensional, right? Everybody looks at support as one dimensional. They look over there and they say, oh, okay, there's a place where people may want to buy it. True. But what are you leaving out of the equation? Joe, you're right. We never know until after the fact, but we usually have great odds before the fact. And if we don't have great odds, Joe, we leave it alone. And when we do have great odds, we take the trade. And most of the time we don't have either of the above, we leave it alone. But you're correct. Julie, you average down, you won't be around. That's right. But what you're not answering my question though. What are you leaving out of the equation? What you're leaving out of the equation is the people that still want to sell, right? Sure, there's people that may want to buy it here, but they have to begin to outnumber the people that still need to sell. Those people that got trapped, where do they get out? Show me, where do they get out? Joe, you bought this at $28. And this is a daily chart, so you worked your week at work, you looked at it on the weekend, and you're down 13 times the amount of money you're supposed to be down because you didn't put a stop in. Where did you get it? Even if you came back every night and looked at it, where did you get out? Did you decide this day, oh, I'm just getting out? Do people do that? Strongest stock in America, oh, I'm down 3 times, I'll just get out here. Anybody ever do that? No. Right? You stay until the pain is unbearable, right? So anytime there's a rally and your people are selling, right? And this is where you end up. There's your new support line. You like that new support line? New support line. Right? So I want you to keep in mind, and this is not just me pulling up a chart and saying, oh, yeah, Julie, you had it right. I didn't want to spoil it for everybody. But maybe you're looking at it. This is a current chart. So, yes, Joe, it's a probability game. Exactly. That's what it is, right? So who is buying? Idiots, RC, at this point. And, and anybody that's traded with me knows I'm not just pulling out some chart after the fact. I mean, it's easy after the fact to say, here's what's going to happen. But I'm going to show you a couple in a minute where I didn't know. I'll show you real-time stuff. This again, this is not any kind of trade idea. This is just showing you how this works. But there's half the people here, you guys have traded with me. I'm just going to make this statement, and you tell me if I'm nuts. I would never, ever buy any part of this pullback. Right? Well, you could be shorting, Nina, but there's probably better patterns to short too. It depends. Yeah, sometimes I would short this, Nina. Yeah, I mean, this isn't exactly what I want to see, but this is an extreme move, but sure, absolutely. Matter of fact, this, Nina, is actually what I do a lot, right? People in the room, you make an inappropriate new high, I short it. Matter of fact, I'll show you, Nina, in just a second. I don't have to tell you what I might have done. I'll show you what I did do. And let me get one other topic here, which is extremely closely related. It's called look left, right? Everybody says that's their answer to support and resistance. Look left. But what are you looking for? What are you looking for? What are you looking for when you look left? Old support levels, sell levels, are they all the same? Every time you put a V, is that an equal areas of interest? How do you define interest? Where inflection points occurred? Previous pivot points, areas of action create buyers and sellers, tops, bottoms, accumulation. Okay. Well, let me ask you this. If you wanted the ultimate area when you look to the left, what if there's no chart pattern there at all? Would that be a good thing? Boom. New all-time highs. New all-time highs. Does that mean that we now have no resistance? No, not in all-time highs, I mean, Julie. And I don't do IPOs because I have no chart. I can't work with it. Wait a minute. If anybody says look left, the ultimate thing would be there's no chart to the left, therefore there's no selling. Isn't that true? I think you, I don't want to take credit for this, but I think you guys are learning here already. I don't know, maybe not. Yeah. If you want nothing there, it means you can only, if that's what you require, in other words, if you're bullish and your resistance criteria is I need nothing there, that means you're only trading new all-time highs. And guess what? And guess what? Where is it? And, and guess what? There may still be resistance there. How could there be resistance at new all-time highs? How could there be resistance at new all-time highs? We just went through this thing here that if we look to the left, there's a mess over there. There could be people selling from over here, right? There could be people selling. Well, what if I go like this? What if I do this and I go to new all-time highs? I'm free and clear. Who could possibly be selling there? Yeah. Who'd be selling? When I get long, when I see this break to new all-time highs right there, and I get long because I'm Joe Trader. I'm sorry, I didn't mean to infer that was you, Joe. I just meant, Joe Trader in general. Well, you know who the sellers are? They're all these people. See, everybody is so one-sided. They think new all-time high means, oh, buyers. Guess what else happens at all-time highs? All-time highs also brings in sellers. It depends on the chart pattern. You have to be able to look at the chart pattern and understand the people who had profits on the way up, are they satisfied or not? Can you tell that on a chart? Can you tell that on a chart? A lot of times, yeah. Sometimes you can't. I want you to remember something, 97. Anybody know what 97 means? 97%? I haven't to this you group of free DTS members, I don't think I mentioned this a long time. Remember what 97% is? No, it's not a Fibonacci number. 97% of the time when you look at a chart, you shouldn't really know what's going on. What do you think about that? Maybe that'll open some eyes. That's assuming you're a really good chart reader. You can make great comments, Nina. I could say all kinds of intelligent things. I could say if this, then that, blah, 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 blah. But 97% of the time, I won't have enough information to trade it. And that's not a made up number. I know most of the numbers I say are made up numbers, but this is actually true because when I go through charts, I actually only save about 3% of the patterns. I'm telling you why. At night I'll scan 1,000 charts, and I've never saved more than 30 charts, usually 25. In other words, 97% of the charts, they're just random noise. They're whatever. See, everybody approaches technical analysis wrong. They approach it from the concept that, okay, show me a chart, and I will tell you where it's going. I can't do that. I can't do that. I could give you lots of intelligent comments, but not good enough that I'd want to put money on it. What we look for are those anomalies, those charts where a buyer or a seller or the group of buyers or sellers has become so predominant that it's sticking out, that it's creating a pattern that says, wow, I really am pretty sure that's going to get sold there or bought there or whatever. Does that make sense? Well, I don't know what other people do, Bill. I mean, I don't know. Yeah, I'm just saying that you cannot expect to be able to pick up any chart in the world because most chart patterns are random noise. See, you're just cruising along. Think about it, guys. You're just cruising along. What makes a chart? There's buyers and there's sellers. The average stock just wakes up in the morning, goes to work. There's people banging it around. These people are buying. These people are selling. Just coast through the day with nothing going on, right? And you come in there. You focus on that chart, that stock, that market, that future, whatever it is, and you're like all gun-ho, okay guys, let's get going higher, let's get going lower, and the stock just goes to sleep, right? You ever have that happen to you? Like maybe 97% of the time? See, if you just look for the mundane, you're going to get the mundane. And you can sometimes play that. I mean, you can play the mundane. You can say, okay, I know the stock's going nowhere, so when it tries to rally, I'll short it, but that gets a little imprecise, right? So let me prove this to you. And again, I'm going to ask some of you people who subscribe to my stuff to back me up here. New all-time high in the Qs and the SPY back in July. All right? What did the world say about that? And by the world, I mean 95% of everyone, everything, every person, every place, every institution out there. What do they say about this? Going higher, right? New all-time highs in a weekly uptrend. in a weekly uptrend. There's absolutely nothing on this chart that would tell people that's the end of it. And even after that, here's the ultimate confirmation, right? The green bar breaks across the top. Watch the chart right here, right? Little red bar comes in, and then guess what? We go above the red bar, right? Guess what? Those of you that subscribe to my stuff, what did I say about that new high? And what if you gave it as a percentage, what was my conviction level? Yeah, Joe, you don't subscribe to anything I do. Yeah, 100. Yeah, Eric does. 100% not going higher. Firm conviction. As a matter of fact, I was so positive, and I don't want to be one of these people that are all just so wishy-washy. Everyone's, oh, you hear it all the time. Oh, we probably will go higher here unless we get a lot of selling, and then we may go lower. I mean, so what I did was I really stood on my head, and that was the top. I shorted this, not the market, but I shorted stocks. And I don't want to bore you with this, but I just want to show you I did a little educational email that summarized that area, and I just want to show you down in here. One, two, and if you, I can email you got it if you've been a member more than a couple months. You got this, but I can email it to you if you want. But it goes through here and it shows in clear, unequivocal language. This will not go higher. This is the top. We will not go higher. This weekly chart will not support it. So I'm just trying to point out the fact, and there are 13 different quotes from published letters in real time that said that is not going higher. I get blowback on that sometimes. You know that? Because the actual calls went out, but when I was doing presentations, like to you guys, I was saying comments like that. I don't hide it from you guys. I don't say, well, gee, if you want to learn what's going to happen, you have to subscribe. If I happen to be talking, I'm not going to lie to you about what I think the market's doing. But I had some people, what's wrong with you? This is new all-time highs, the most bullish thing in America. I'm long everything. Well, okay. Well, we're not going higher. Do most breakouts fail? Well, it depends what you describe as a breakout. Most properly formed breakouts work, but depends what you call a breakout. What I see people call a breakout, I'd give some breakouts a 100% chance of failure, because what some people call breakouts are not breakouts at all. So you're using an English term, TJ, right? Breakouts. What's a breakout? If I asked you guys all to give me a definition of breakout, I'd have 89 different examples of what a breakout is, right? But properly formed breakouts work fairly consistently. It's also a matter of how do you get into them the right way, right? That's part of the art of learning all this. So they can be very good patterns, but I think the way most people look at them, they fail miserably. Yeah, a new high of some sort. That's not a great trading, right, TJ? I'm kind of trying not to chuckle, but it's not a great trading definition, right? If you're teaching somebody, well, here's a breakout, a new high of some sort. Well, obviously we need a much, much, much cleaner definition. Let me go on here because I got a few more slides and some more great education. Already at 3 minutes till 6. Cat. Let's talk about this chart. Here's where cat is. Can I look at Apple? No. I'm teaching right now. Maybe at the end. I don't even have my charts hooked up to here. This is all just on a slide right here. But I'll answer your question when we're all done, RC. I'll hang around for you. Where is the resistance on cat? Can you see the numbers good enough? You can blow this chart, up on the top, you can hit that little button and you can expand it to see your whole screen. Where's the resistance on cat? 135, 140. Would have thought 140. Well, again, I want to put these thoughts in your head, and please keep in mind, there's a lot to learn in this category. Does everybody understand that? There's a lot to learn in this category, okay? And again, it's not rocket science. I'm not trying to, it's not like being a medical doctor, but I'm saying there's stuff to learn here. But let me just put this thought in your head. Resistance is an area where people want to or need to sell, right? So if there's a group of people here, right, that need to sell because they were long and had this painful drop. And by the way, long-term traders, this is, 2 months is nothing. That's not a long time ago. If some of you are totally day traders, you may think that's insane, but no, it wouldn't be insane at all for somebody to hold a stock from 140 down to 115 over 2 months. I'm not saying it's good, but they could be playing a monthly chart for all I know. It could be acceptable. But if you get in a lot of pain, and you're going to want to start selling, right? So as you get into this area, you can see that there are people here who maybe went long right there. Look at that. And they're stuck. And as this price comes up, let me ask you something. We move up to here. People who are stuck sell, they 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 sell. Keep selling, keep selling. We get it right up here to 140. Who's left to sell? Who's left to sell? Do you understand what I'm saying? If these are all your sellers and you've eaten your way through all the sellers, in other words, an army of 100 attacks an army of 1,000 and they beat the army of 1,000. And at the end of the battle, there's 80 of the 100 left. In the army of 1,000, there's only 2 guys left at the far side of the place by the campfire. Who's going to win that battle? In other words, once you're here, do you understand what I'm saying? Is there really any resistance left? In other words, the tippy top of this chart, who's left to sell? Do you see what I'm saying? Yeah, Mara, I think you're one step ahead of me, Mara. I'm going to mention that, right? Does everybody see this point, though, that in terms of sellers, the sellers exist here and here? No, that's right. But once you get here, they're gone. Do you see that, everybody? Just conceptually. Do you at least see the problem in thinking that this is the area up here? Because you've eaten through the problem at that point, right? So it's something you got to think about. Now, when you get here, though, like on this chart pattern, if we got there, you probably would see selling, not because there's selling left, but because of exhaustion. In other words, there's also no buyers left because this is a vertical pattern. But this is where you start to see the selling, and then you look for a lot of other cues. You look to see how things get reacted to. When people start selling, is there follow through? Are green bars ignored? Run bars ignored? How about the coordination of the market? If this stock is supposed to trade with the market, and on a big up day in the market, it just sits there like a bump on a log. Is that something you can use to your advantage? So the point was that this is not just a random chart. This is a traded. This is a long-term trade. Again, long-term trader. It's not a long position. It's a short in the long-term trader. And took it right off of there. I mean, just right off that top in there. Right there. September 20th was the day I shorted this, and let me get the number. I should have put it on there for you, but it was under 129.59 coming off that top in there. So again, understanding resistance that may not look right to you, but it is the spot that should work. And do I have the rest of the chart of CAT here? Yeah. CAT hit a target 1, and these are long-term positions, so that was a big target 1. It was nice, and targets 2 and 3 are yet to come. Let me show you one other one with a similar question about this big topic today. We're right here, the bottom of that green bar. Do we have resistance to our left? Right here at the bottom of that green bar. Right there. Do we have resistance to our left? Is this a short at major resistance, or is it a long? Because I don't know why. If you have charts, take a look. It's just the daily chart. You may want to also take a look at the weekly chart there. Julie, it gapped up. Do we learn anything about it gapping up? Julie brings up an interesting point, and part of what I teach in terms of understanding the language of charts. I think you got a pretty good eye for a lot of this, Julie. By the way, if you really are a Julie, I still hold firm that women are better traders than men. Sorry, guys. Okay, I don't think this is resistance. I think this is a long. And not only do I think it is a long, but I actually went long there. This is ATVI. I went long, not here, here. That green bar day, expecting it to continue higher. Why? Well, it's a balancing act. Yes, if you look left and you're in Mickey Mouse Technical Analysis 101, you look left and you say, oh, that's no good. But you have to understand the balancing act. What did you get over? You got over a lot of stuff. You defeated this huge army, right? Right, Julie? You defeated this huge army. And then there's these 2 guys by the campfire and saying, well, what are you going to do to me? And then there's another test. Remember I said, well, what if we had some way to kind of confirm what's going on? Well, we did. We gapped up this day. That doesn't mean anything. That means absolutely nothing. It's the next day that matters. What happened on the next day? No, the next day. The day it gapped up, it made that high, then it pulled in, and the next day is a red bar. Oh, did I think I just answered my question. I'm sorry. Right. See, it's not the gap that's important, because a lot of these gaps will collapse. As a matter of fact, what got my interest in this, I was watching ATVI. You guys come to the Monday night thing, right? You go back to September, ATVI was one of a half dozen stocks I had on the long list, right, from the weekly chart. So boom, it gaps, but you know what it did? That red bar right there, you see that red bar? If the gap was going to collapse, it would have done it that day. In other words, here we come into this resistance area, and we have a question for you, Mr. ATVI. I know there's probably some sellers there. I know you just conquered a bunch of these people down here. Are you serious or not? The bears come in and they start selling. Here come the sellers from here. Boom, I'm selling you. Can't even fill the gap, right? Can't fill the gap. See, that's key. Not that gap fills are critical, but I mean just the fact that it held the gap. And when you look at the balancing act, you're saying, you know what? I could see this coming in, but it didn't come in. See, that's the clue. That's what gets it in the 3%. Do you understand? This stock just gapping up to here is nothing. You don't go long there because the next 2 days, you know what could have happened? It could have done this. This weekly chart was mostly sideways, right? Yeah, this is the 3% to say, hey, what's going on? You refuse to sell off. Yeah, I hit target 1 up here, Mario, and still have 2/3 right now. Nice target 1, and not only that, it's a long-term trade. Hit target 1 in 2 days, so that was really, really nice. Yeah, bro, very short time. Yeah, it actually was on this day. This is one of those rare times that it just went right to target 1 on the gap, and 2 days later, amazingly. Yeah, that was one of those rare. Hello, how did that happen? Oh, and this is ATVI. I didn't change this little thing down here. Sorry. Look at the chart. That was from the last chart, obviously. Okay. So that's what I'm trying to explain is all these things that come together to understand how to read charts. And all these presentations I do, it's always trying to get you to see the level above where you need to be. I'm not sure that it makes sense to you or not, because I know the vast majority of you are in the situation where you're learning and you're thinking someday I'm going to learn this better, either to trade a long-term account or maybe I'll start day trading a day or two here or there, and you're trying to build up. And I just want to get you, thinking the right way and get that next level above, because a lot of what you just so much of what I hear explained and taught and said is just not enough. It's just wrong. It comes up short, and you just need to get this insight. You're still not right all the time, of course. I'm not trying to tell you you're always right, but you have to get those odds up there, where you can make money. And most people don't come to the battle properly equipped. They come to the battle looking at the 97% and wondering what's wrong and using skills and chart reading concepts that are just wrong or antiquated. And hopefully I showed you that today. Like, this whole void thing drives me nuts. A void, like I showed you, is the most restrictive pattern there is, and yet people tell me it's the least. Well, it's just not. It's you can't even argue about it, right? Well, for those of you that really want to learn it, I mean, and some people don't even know what I do is, but come take class with me. I mean, that's what it's for. It's extremely cheap to do the whole program, and you'll never regret it if you do. It is if you're ready for it. Some people may not be ready for it. You can read about it if you want to on the seminars page on the site. Let me drop There's a nice little summary of it if you ever want to read about it. From unquestionable comments I've had for some people, the price is probably going to go up again. People are actually not signing up because they think it's they think it's the Hyundai of the world. What do you say now? You used to say Honda, Hyundai. What are you saying? What's the I'm not even sure of Kia. What's the cheap car that you pick on these days? I've not had anyone explain to me. Thank you, Nina. Well, I mean, a lot of people say that, Nina. I've been able to be in a situation where I trade and I teach and do them simultaneously, and I've been through this. I was never a trader. I mean, I started like you. Back when I started, I didn't know a stock from a bond. So I'm really big on the concept that you don't need any prior experience. As a matter of fact, I prefer not having somebody with experience, because my biggest problem, to be honest with you, the people that I struggle to teach are the ones that hang on to old notions and old information and refuse to switch over to what I would call kind of a new way of thinking almost. That's my biggest problem as an instructor, is trying to get those people to, kind of get on board with everything. Did you buy ATVI the day of the game? I bought it on right where that arrow is pointing, in the middle of that green bar day, over a little hourly threshold. So before this day, I was long this day, so I was long when it gapped up the next day. Obviously, quite happy. Yeah, Nina, I'm done. For those of you guys who want to leave, I'll sit here and chat with you now about whatever you want to. But Nina, that's the number one thing I hear by far. It's just the number one thing. You know, am I going to pay to learn this again? And I wish I had an answer for you. I don't know what to tell you. I wish I had an answer for you. And that's part of the reason I try to keep this so cheap. I mean, I know you can spend $25,000 on some of these programs, and 90% of what you learn you don't need. It's just crazy. It's called filler material. And the problem with filler material, it's not that it's just unnecessary. It's bad for you. Why is it bad for you? I've been here, Nina. Where have you been? Why is filler material? Yeah, the problem with filler material is if you have to learn 5 times the information and then extra 5 times the information only improves your skill 1%, see, it starts clouding what you're doing. In other words, you don't know what to look at, right? So you don't want to learn a bunch of crap, and half the crap isn't even accurate or true or worthwhile learning. It's just garbage. That it may be nice to talk about it at a water cooler. Like if anybody ever tells you about trading the market based on interest rates or about the news going on or about understanding the import-export situation, I mean, just run for the hills. It's all garbage. I mean, if it helps you, what we do when we look at charts is we look at the end result of all of that garbage. All that stuff's out there, and the market digests it, and it digests it way ahead of time. That's why, I put out, some of you probably got it, I put out this thing, I think I did it, in the weekly market summary 2 weeks ago. I put the stupidest comment I ever heard, which was that if the president gets impeached, we will see the market collapse. Do you know what a stupid comment that is? I mean, no offense, and by the way, it doesn't mean that we won't fall. But if we fall, it's because of the chart pattern we're in right now. I'm just saying the market knows about whatever may happen. And by the way, there's zero chance that we actually will have the president actually removed from office. There's zero chance of that. I think you all know that. But the market already knows impeachment's been in the air since he was elected. So why is that going to affect the market? The market could care less. And to the extent it cares, it's already built into the price. All this stuff is. So, I mean, you can't look at news and think that you're making intelligent decisions. It's all been built in a long time ago. You're trading ghosts if you're doing that, right? Thanks, Andres. Well, see, Julie, again, this is what I chuckle at. Generally during impeachments, what's your sample base that you're using for that? And let's not count Andrew Jackson. Let's not count him. What's your sample base you're using for impeachments? For statistical analysis, what do we need? We need 100 samples? Yeah, 2. Technically 1, I would say. Yeah, I know. So, I mean, it happened one time with Clinton. But who knows? Julie, see, this is the problem with this stuff, that people label it a certain way. Who knows what else was going on in the world, in the economy, in the market, that impeachment had anything to do with anything that was happening at the time, right? I mean, it's just, and from what time are you measuring that, right? During impeachment. See, if you start measuring your 10% from the minute that Congress says impeach, well, it's already old news by 6 months, right? The impeachment of Clinton was coming for 6 months. So when did you start that measurement? I mean, if the market dropped 20% and rallied 10%, is that a 10% rally? You know what I mean? All this stuff is just so silly to cloud your mind with. None of it matters. None of it matters. It just doesn't. Here's what matters. Understand that stock's going higher and take it long. Or the other charts I showed you. And it has nothing to do with impeachment, and it has nothing to do with China, I hate to tell you, and I've proven that to you in other events. It just simply doesn't. It's hard to believe it because, every day the news tells you that it does. And it looks like they prove it because the market goes up and they say, look what the news was today. I was going to capture it for you and save it for you. I was looking on my phone, and I don't know how Google found out, but somehow Google is now sending me CNBC market commentary, and the title was whatever it was. But yesterday the market rallied because investors were less worried about China. Can you believe this stuff? Correct, BC. The market has nothing to do with interest rates. Not in any tradable way. Come to the Friday events. It has nothing to do with the trade war. Do you know that the first 9 instances of trade war news that were devastating to the market rallied on every one of them? I have a chart that shows you that. I did it at a prior event. The 10th one, the market fell. Why did the market fall? Because it was that May high that I shorted, not because of China, but because the chart said it's time to fall. When the chart is at an area that there's more sellers than buyers, any news will make the market drop. So everyone said, oh, China made the market drop. It was the 10th time we heard bad news about China. You've got to be kidding me. The one day that the first time they raised, the one time when they raised rates, the market dropped and it was blamed on raising rates. Do you know that that was the 9th raise, BC? It was the 9th time the Fed raised rates. The first 8, the market rallied. Nobody cared. But the 9th time, oh, the market's dropping because of interest rates. And do you know what they're saying right now? They're saying that a bad economy maybe is good for the market because then we won't raise rates. It's just crazy. You know, do we want a good economy or not? Well, if the market rallies on good economic news, it rallied because of good economic news. What if the market falls on good economic news? What happens? Well, the news is, well, good economic news means there's less chance to lower interest rates and it's bad for the market. See, it's just a circular thing. You say whatever you want to say. And to me, I'll talk about it with you, but there is no discussion. There is no discussion. I've been doing this 20 years. I study this every single day. I stare at charts every day. And this is like the discussion, Paul, is the sun going to rise in the east or the west tomorrow? You're trying to debate it with me. I'll gladly talk about it with you. But there isn't, and I need you to understand, there is no discussion. Period. It's not a matter of opinion. It's hard to believe me. I understand that if you're new. But some people have been around a while, start to get, market is generally quiet, goes crazy. Yes, BC, again, you're obviously new this last week or something, but with me, there's knee-jerk reactions, BC. I understand that. Of course there are, right? If Trump tweeted right now that he's thinking about pushing the button on a nuclear bomb in middle Africa somewhere, there's going to be a knee-jerk reaction. And by the way, there is news that does affect the market. It's called shock value news. It's extremely rare. We haven't seen any. But all the stuff about interest rates in China and all the stuff, that's not shock value. That's all known about. Guys, you know what? I have news for you. China's been around 1 year. We know about China. Did you know that? We know about China. There's no news. China trade war's been going on a year. 1 year. There's no news you can tell me about. We're going to work it out. We're not going to work it out. We may work it out. We feel like we're going to work it out. You know, all these words come out to try and justify the market moving up or down 10 points. But yes, true shock value news. I'm not telling you that if we drop a nuclear bomb somewhere, it's not going to affect things, but that's shock value. I'm talking about all this normal economic day-to-day stuff. And yes, there's knee-jerk reactions. The day the Fed announces, I want you to check something out for me, BC. Check something out for a learning experience, all right? I want you to go back to the last 10 Fed meetings, all right? The FOMC Fed meetings, 2 o'clock on Wednesday, every 6 weeks, all right? I want you to go look at where the market was at 1:30 before, okay? And then I want you to tell me where the market was at 10:30 the next day, all right? You go do that for me. For those of you who don't want to do the exercise, you will find that 9 out of 10 times the market is exactly where it was before the announcement. Exactly. Kramer's saying, who's Kramer? From Seinfeld, you mean? Neo is going to run out of money maybe in 2 weeks. Employment manufacturing. Yes, BC, you should absolutely ignore all those. See, BC, you got to stick your head above the clouds. You're not getting it. It's not that unemployment doesn't matter. It's not that it's all already incorporated and built into the price, BC. Do you think the market is just sitting here and it has no idea that unemployment's low? And all of a sudden we come off the new unemployment and the market goes, oh my God, we have low unemployment. I didn't know that. Let's run the stock market up, triple the value. You know what I'm saying, BC? This is all built into the price. It's all been there for a long time. All of it matters, but all of it is completely untradeable to you because it's all been already factored into it. You have to tell me what's going to happen 6 months from now, which you don't know. And even if you knew, it may not help you. How about this, BC? In 2009, unemployment in America had its biggest increase in history. It went up 50% from 7% to 10.5%. Right, BC? Remember 2009? Guess what the market did during that time? If you think unemployment affects the market, when unemployment had its biggest increase in history, what did the stock market do, everybody? It tripled, BC. It went up. It tripled in value. Or doubled. Did it double? It went up like crazy. How do you explain that? And when you do explain it, if you do, then I got to come ask you, why are you looking at it? If you have to explain it away, then what good is it to do to look at it? None of it matters. But the afternoon Fed announces whatever's. Yeah, there's a knee-jerk reaction. So I don't trade the Fed. I just leave, BC. I just leave. Why trade it? Just wait until there's a normal thing going on, right? With a couple of hours, markets are right. Right. Exactly, Glenn. Exactly. Markets are back. You know where they are, Glenn? After the knee-jerk reaction, they go back to doing what they would have done anyhow. So if the market was rallying, it will go back to rallying. And if the news was good, the news gets credit for causing the rally. If the news was bad, we find some other reason why the market rallied. We find whatever good news there is, right? This is all old stuff for some of you guys. Speaking of news, those futures just dropped 25 points in 4 minutes. Cool. I'm looking at your. Yeah. Well, what happened? Somebody said something. Yeah, Alan, exactly. Quick, everybody, go along the market. There's a void above. All right, guys. All right, this is all a little extra credit talk here, mostly brought about by BC, who is probably a little bit newer with me, so I went through this stuff. But I wish I could explain to you the conviction I have, BC, if you could shortcut a lot of time and, believe me, because it is just so true. Remember this too, guys, for some of you, the vast majority of people that come to the market lose. The common average thinking of smart people, by the way, the common average smart people thinking loses money the vast majority of the time in the market. Most people lose when they come to the market. Speaking of news, well, you can watch news, BC, if your own personal. I watch news for my own personal knowledge, but don't bring it to the market. It may be hard when you're new to not bring it to the market. Yes, Jerry, it is. It is being recorded. I just looked at the recorder. It is running. So absent some kind of terrible computer virus coming in, typically these get posted on the weekend when I do a midday event. So excellent trader friend, very strict about it. Thanks, Julie. Try not to think about anything. Well, Joe, that's actually some pretty good advice. Well, here's 2 more comments for you, BC, that may help you if you're still here. Number one, I've told everyone here, and I haven't asked a question. If I had to train somebody to be a successful trader in 3 months and my life depended on it, I would pick a 15-year-old video game player. So maybe that should give you some interpretation. The market is a video game. And I know nobody likes hearing that because we all want to be smart and figure things out, but that only loses you money. How did this go? I put this in a seminar. I put this in a presentation recently. And when I went back to read it, I loved it. I forgot I even wrote it, but it was, here's what it is, Joe. Think about this. Most people think the way to win the market is to look at where prices are, to understand that 220 million people have decided that's where the price is, and then to say you're smarter than those 220 million people and the stock's going in a different direction. That's what some people say. What I say is this, BC. I say I'm stupid. I don't understand any of this, and I don't try to understand any of this about what's going on. But you know what I can do? The people that have the real money, that push prices around, I can learn to just follow them. If I can follow them, I'll make money without understanding any of the rest of it. So I'm so stupid that I'm just going to follow somebody else who knows what they're doing. Now, by the way, that person maybe doesn't know what they're doing. They may be completely wrong, but if they can move prices enough that I can make money, it's all I need to do. If they move prices higher for 3 months and I manage my positions, I make money for 3 months. And maybe they're wrong 6 months from now, but I can understand a chart, manage it, and get out with profit or whatever. So I'm not trying to be smarter than the rest of the world. I'm trying to read what the rest of the world is doing, and that's what a chart does. A chart doesn't say that everything's wrong about the employment and interest rates. It's saying, okay, I understand all this stuff, and here's where we are. Are you smarter than me? Me being the chart, not me being me. Me, the chart. 220 million people decided this is where I am today. And you're saying that's wrong? You know more than I do? See what I mean, DC? When you really get into it, there's nothing to talk about, right? Actually, by the way, I came out with the 100-day schedule. I've been talking about this for a year. I'm going to email it to all you guys, to everybody that's a member here. I'm going to email it the next couple of days. It's what I feel is a realistic 100-day schedule from zero to being successful, to be able to understand and make money long or short term. 100-day schedule is exactly what you should do. It was intended, obviously, for seminar people to say, here's how you progress through, but it's not a secret. It's something all of you should know, what the expectations are to 99 days. So that'll be, it's all done. It's just sitting on my desktop. It's totally done. Proofread, so there's less than 6 typos in it. Less than 6 is my goal. And it'll get out to you this week sometime. All right? Well, BC, if you're here, it's because you're a member, and if you're a member, you will get it. So it'll come in your email. Look for it this week sometime. If I really get messed up, it may come Sunday, but probably because I'm going somewhere this couple days. Well, Friday night, Saturday, but you should get it before that, right, guys? Thanks, guys. Any last questions? BC, if you want to day trade, you can pick a time to trade almost any time. I feel. I really prefer the mornings a lot. But you can find your niche anytime, really. And if you have, what I really suggest is if you have even a couple hours a day. Let me add this too, guys, before you leave. For those of you, that are trying to work into being a trader, most people's goal is backwards. They kind of try to save up from their job and then quit their job and become a trader overnight. And that's not what you should do. It's not how it works. The best way to do it is for those of you who have the ability to have a couple of mornings free every week or a couple of days a week. A lot of the people in the room are people who, some are just full-time, but some people they're consultants and they work a week and then they're in the room for 2 weeks, or they're away Friday through Monday, but then they're in the room the other 3 days, or they start their workday at 11 o'clock and they're with us every morning. If you have a couple hours free, 1 or 2 days a week, I think you should be in the room and start to, apply some of this stuff. So Joe, yeah, I think absolutely you should do that and begin learning so that at some point there's no decision to be made. If you can start making income that overtakes what you make at your job, then there's no decision. You do it. But until then, you don't. The biggest thing that scares me is people that just say one day, well, I'm just going to quit my job and I'll learn to do this in 30 days. And no, you're not. You're not going to learn to do it. It won't happen. Yeah, in terms of the room, BC, well, I'm on the mic. Come and take a trial there and you'll see. I mean, I'm on the mic hitting it hard from 9 o'clock until 10:30 typically, and then maybe a little later. And then some days I may come back to type or to talk and look for something at lunch. I don't focus as much in the afternoon. My style, I like the opening 5 and 30 minutes, and then I also like the 10 and 10:30 times. So I like that time, but I'm just saying you can find your niche anytime. But yeah, the room gets pretty quiet in the afternoon. So I mean, quite honestly, help just from the afternoon. There's always going to be lists. There's going to be my favorites. The room's open all day typically. And actually some of the traders that are talking and doing stuff, I'm usually more quiet in the afternoon. But it depends. One day this week, yesterday I was busy all day because I knew the morning would be tough. And actually the only time I made money was in the afternoon. But typically on a normal day, I like to hit the morning myself personally. All right. So it's open. We're there. I'm just usually typically quiet. Some days I let you know. I mean, on some days I typically say, okay, I'm probably done. I'll come back, take a look. But I'm happy, whatever. And I typically have stuff that's playing out. I like to hold day trades often, 3-4 hours all day, whatever it is. So typically I'll be having something play out, but I'm usually not looking for new stuff in the afternoon unless the pattern of the day or of a specific stock is such that I have to wait for it in the afternoon. Okay. Yeah, if you're going to swing trade in BC, again, I suggest you go to the free stuff page and read a video I have about swing trading. If you're going to swing trade from daily charts like after work, I suggest you don't do that. It's the worst time frame possible. But if you want to swing trade by coming in on the afternoon and using hourly charts, what we kind of call a hit and run method of swing trading, where you come in and use hourly charts, get in during the day, and then hold for 2 to 3 days, that's a very good way to do it. Yes, that's an excellent way to do it. And I have lists out there every day that are just designed for that. That's exactly what they're designed for. Now, me personally, I like to day trade and long-term trade. I don't really like holding overnight unless it's long-term. I don't like being distracted in the morning. I like to focus in the morning. It's distracting for me to have something from the prior day. I do it once in a while, but not as a rule. But yeah, that's a great thing to do, and it is something we look at and talk about a lot. Yeah, the room is a subscription thing. Julie, educationally with me, there's one price you pay. That's it. It's 3,700 for the entire program. Did I drop that in here for you? I don't think I did. That's educationally, and there's nothing more you would ever do with me. If you said to me, Paul, give me the full boat, give me everything there is, give me unlimited coaching time with you, and that's it. It's $3,700. That's all there is. There's nothing more you can ask for or get. Period. Educationally, subscription-wise, there's a trading room. There's a long-term letter. No, for life. That's it. You don't understand you don't understand my words. Yes, it's extremely cheap, and yes, 90% sure it's going up at the end of the year. And the reason it's going up is because I've discussed with people who went somewhere else, and they said, you know what, for 37, well, it was 20 for that price. I didn't feel you could really provide what I needed. I'm like, oh my God. One person went to one of my students and paid twice the price for half the material. One of my students. It wasn't even a very good student. And so, I don't care about it that much, but that's what it is. So then, if you want to subscribe to the room, let me just give you this is so nicely done on the website. I don't know why you guys ask me this stuff, but if you go to the services page here, let me just give you the services page here. In the very first thing, there's a trading room, and you can read about it. If you click on it, you can take a trial. If you click on it, you can sign up for it if you want to, whatever you want to do. Okay. I do not day trade options myself, RC. I've just been sticking with stocks. I started with options in the beginning part of my career. I'm very knowledgeable with options, but I haven't. I like to keep things simple as much as possible. And I'm always tempted with options. I've always had a soft spot for options. I always want to kind of go back to it. But I just kind of want to keep things simple. I want to come in for 90 minutes, a couple hours in the morning. I want to have my long-term stuff, and I've really made that priority for me, and let people know that. All right. You can though. I mean, if you're following me in the room, you can just take options with it instead of what I'm doing. Most of the stuff I do is very liquid. The main list I work from is the top 300 volume stocks that are out there. Occasionally we get involved with some gaps that maybe have less volume. You got to deal with that. I don't like that as much, but sometimes it's worth it to push a little because some of the gap trades are good. Yeah, yeah, that's fine. And again, RC, you probably enjoy some of the videos on the free stuff page. As a matter of fact, there's so much stuff there, you could probably spend an entire week off listening to all this stuff. But there's a video there about for newbies. It's called "What to Trade," and I like trading the market sometimes myself, but I just tell people I think it's challenging to trade only the market because it's one thing. Right, RC, it's one thing. Remember I talked about that 97%? The market is one thing. How often does the market fall in that 3% category? And that's the thing. I love the market. As a matter of fact, I mean, recently I did a little email about this exact topic. I did a futures trade. It worked out great, and the reason I sent an email around is because I hadn't done one in a month. And to be honest with you, if I had to trade only the futures, I think I'd have a really hard time because I don't have the patience to wait for that 3%. Stocks give you, to me, the added edge. And again, don't yell at me. I love futures, and if you're doing it, that's great. I'm all for it, and what I teach in class applies to futures. Nothing wrong with trading futures. I just want to point out that you have to have more patience than me, to be honest with you. Not the same stocks, PC. A lot do come up repetitively. My number one source of trades is a list of 300 of the highest volume stocks that I look at on hourly charts for day trading. So a lot of those come up sometimes, and they're a lot of the big names you would know. And like we end up with Tiva on the screen a lot. Sometimes stocks get a certain, you know, tinge to them. Like Teva was so bearish for a long time, and KHC, KHC, is that right? Kraft Heinz, yeah, Kraft Heinz. They were just like great, so they were really featured for a while, not because I fall in love with anyone's stock, but I fall in love with a pattern sometimes. Um, but but it's not like it's just one handful of stocks. So I pick the best of the 300, and then I scan daily charts, so that can be a wide variety. And then there's the gaps. I also look at the gaps every morning. So the gaps, of course, will change every day. So there'll always be some new names we're looking at, but then there's some of the old ones that come back. And there's a coffee with Paul Saturday scheduled for a week from this weekend. Another one of these talks 2 weeks from yesterday. And I'm probably going to have a night for just talking about seminars and services, but I'll let you know that's what it is. So you don't have to attend if you don't want to, but it'll be a non-educational night. Because like today, I get a lot of questions about stuff, and I get email questions. So I'll have a night where you guys we can just get together and talk about the pros and cons of different things. I'll send. That'll probably be next week sometime. I'll send it out to you. It'll clearly say though that this is not an educational night, so stay away. That's about Apple relative to your charting. Would you have predicted when to get in? In hindsight, I can always predict. What do you mean? How long ago to get in are you talking about? Um, RC? You mean like years ago, or you mean yesterday, or the past few days? Well, I always want to be careful not to try and answer questions in real time how I would have answered them. I have not traded Apple, so take that for what it's worth. But yes, it's had a very nice pattern. And the other one is Microsoft. I was long Microsoft today. We won't talk about that. But yeah, no, Apple has definitely, Apple's become a somewhat unique pattern. Yeah. I look at it every day. I've always just had a hard time. I've never considered it long term because I'm very squeamish on the bullish side. I'm more in the midterm, long term positions. I am 3-to-1 bearish over bullish. And I'm hoping they're all unique, so I hope ATVI works no matter what. But I'm not really looking at the market long here. But I've also acknowledged that I could change that. So I've not been looking at Apple long term. As a day trading thing, I just don't always have Apple on the screen at the right time. But no, it's been a nice pattern. It's had that nice sideways 60-minute chart for 2 weeks. I'm looking specifically like at 3 days ago. So yeah, it's been a very nice pattern ever since September 3rd or whatever that was, where it's been sideways. So it's a nice pattern. It's something I've definitely, um, I actually had it on my list 2 days. I had it on my list 2 days. I never traded it though. Had it on the list 2 days. See, to get a trade, it takes a lot of things. RC. I mean, number one, you have to recognize that ahead of time this is something you want to look at, right? And then you have to have the stock cooperate with you that day. In other words, you could be bullish on something, but if it just takes off without you, I don't chase it. I make the stock do what I want it to do. That's why I always look at several stocks. So it has to do what you want it to do. And then when it does what you want to do, you have to be there looking for it and waiting for it. In other words, you're not distracted with something else. So there's a lot of stuff that has to come together for any one stock to, to get the call, so to speak. So there's a lot of them I can look at and say, yeah, that was nice. It just didn't have it on the screen at the right time in the right place. So, but it's a good chart, yeah, bullish chart. Oh, thanks, Jim. Yeah, you'll get it out there. Good, Efron. Something must have just happened. Mark it down to. Yeah, somebody mentioned the futures were tanking. I put them up here. Let me see. Do we go even lower? Oh yeah, even lower. Cool. That's okay with me. See, here's the thing, guys. As a day trader, you care less, right? As a day trader, you care less. As a long-term trader, you may care a little bit. But hopefully, if you got the right positions at the right time, and you're leaning the right way, you're usually happy. So we'll see. It'd be interesting what the news was that caused this. Just from again, I shouldn't even said that. I don't. I meant from my personal Paul. I'm just curious what's going on now that's happening. Trading wise, could care less tomorrow. But number 2 pattern or number 2 pencil? Number 2 pencils are what I use to stick in my eardrum when I do a bad trade. That's the punishment I use to not do it again. I'm not sure what a number 2 pattern is though. Now see where we end up. Well, it's like I said. This type of news, even right now, no matter what it sounds like, when it's all said and done, the market will keep doing what it was doing. Period. Off the daily chart, to me, the market is still bearish. Off the weekly chart, very close call in here. So I mean, I would expect that any bad comments will be taken as an excuse to sell in here, but it's a close call. We'll see. TJ, I don't trade after hours. Years ago, I did that for a little bit. Um, number one, the biggest thing to me was I was just getting too involved with stuff, too much sitting at the desk, too much doing stuff, and that's when I went back to focus. I don't even know net if I made money after hours. I mean, I remember some great victories, hooray, and then I remember some defeats. I don't even know, but at some point I said, you know what? I just don't like sitting here. I don't like, just don't like it. I don't think if you want to focus on what you do, that's fine. I don't have a problem with it. I mean, as long as you're trading liquid stuff and you get in and out, as long as you can get in and out. I just have a problem with somebody who just sits at the desk all day long. You can't sit there 8 hours. I think you should be trading 2 hours as a day trader, maybe 3, or maybe 2. And like what I do is I'm probably hard at it for a couple hours, and then I'm just glancing at stuff the rest of the day. My screen's set up. I may look for a minute every hour or something, but that's all I'm doing. I think it's very detrimental to try and sit there. And if you sit there all day and you start post-market trading, I think you're just, I think it's bad. Recession. What's a recession? What do I think of the headline, President Warren would be disastrous to the stock market? Here's what I think of that headline, BC. Another headline, President Donald J. Trump would be disastrous for the stock market. That was the headline also. Matter of fact, when he got elected, the Dow dropped 800 or 900 points that night. So that's what I think of that headline. Market could care less who's president, generally speaking. But here's the thing, though, BC, and here's the important thing. To the extent the market cares, and we don't know how much it cares, it will adjust to it on an incremental basis between now and whenever. So whenever you decide that this is disastrous, the market will have already given you its answer, and it'll be too late. The market is the greatest forward anticipator of anything out there. It anticipates all the stuff, digests it, and then the dum-dums follow along and say, oh, that's bad news. Let's go short the market. We are close to a top, but we're not at the top yet in the big picture. First time in 10 years that I've said I could change that answer sometime in the future, but we're not there yet. What I would love to see some kind of good news thing make the market go higher, and for us to accelerate into this election. I would love to see that, because that could be, the top. No, Glenn, the market dropped overnight futures after the election. When he won, the market reacted with a, look it up, 1,300 point drop or something. And then the next morning it corrected with the immediate reaction. And the headlines were, this is a disaster. BC, the news is trying to mislead us. The news's job is to get subscribers. The job of the news is to sensationalize everything so people listen. That's their job. It's not necessarily to intentionally mislead you, but if that is a consequence of what happens, then that's what it is. And that's true throughout any news that you listen to, even if you listen to the hurricane warnings in Florida. Did you really, Glenn? You were trading the market that night? Wow. Cool. Wow, nice job. I tell you what, I'm going to give you the comment that you could pay thousands of dollars a year to get this comment from some of the best market commentators and some of the best economists in the world. And here's that comment about the future of the market. At the moment, we don't see any issue with the market as it's continuing good economic instability and continued upward growth. But at some point in the next 2 to 5 years, the possibility of recession setting in after this long bull market is very strong, and we predict a 30% chance there'll be some kind of recessionary activity going forward. There you go. Just send your checks to me if you don't mind. Do it through PayPal. Send a couple $1,000s, because that's what you pay for that type of advice typically. And I'm not joking with you. Remember somebody, I read you the comment. Do you remember that? Don't laugh. Remember? I showed you the picture of exactly that. Remember? The great prediction from the fantastic hype, I forgot who it was. 30% chance there may be a recession next year or two. Wow, really? Gee, thank you. 30% chance there may be a recession in the next year or two, and with recession totally undefined. There's some good information for you. Isn't that great information? Take that to the bank. We can all retire now. Yeah, yes. Well, it all becomes very close to Yogi Berra and his view of I forgot what is his famous quote. You buy stocks when they go up, and if they don't go up, don't buy them. There you go. That's like stay the course. Stay the course. It's funny. You can use statistics any way you want to. Yeah, the market's been up over any 40-year period. But if you would have got in 2001, it would have taken you 17 years to get your money back. Is that right? Something like that? I mean, I don't know about you, but I don't know. A 17-year break even is not a very good thing to me. So considering the market is relatively easy to time, I think you try and time it a little bit. Well, I mean, it is true. I mean, long term. I mean, if you're very young and you got in the market 10 years ago, there's nothing wrong with staying the course. It's perfectly fine. It depends on your overall financial plan. I mean, it depends on what your big picture of stuff is, and what you're doing and how old you are, and that's the type of stuff you should see a financial planner for. Financial planners are good people. I think they're great people to organize, categorize what you do. It just when it comes down to here's the money that goes in the market, I wouldn't trust them for 5 cents about when to get in, when to get out. But generally, they're not telling you that. They're just saying, here's the part, go do what you want in the market with it type of thing, because it's kind of optional. 13 years, Julie, is that what it was? Okay, sorry. I was trying to remember in my head. I think there was a time, though, that was worse. I forgot from when to when, but it doesn't matter. You get the point. I mean, nobody wants to wait 5 years to break even. What is interesting, too, though, is almost everyone misses the best part of the bull market because everybody gets out way too early. On a true bull market, that last accelerated run, everybody was already out shorting whatever, way ahead of time. So bull markets always last longer than people think. A true bull market, yeah. There is no longer a company left from the Dow 30. GE was the last company. I remember I used to do that fun little quiz for years and years and years. It was always GE, and now GE is gone. GE's almost gone, period, but it's certainly gone from the Dow 30. Yeah, well, actually, Jen, that's the question I used to ask Glenn. I always used to ask the question, even when GE was still around. I always said, if you, the Dow's been up 10%, let's say the Dow was up 10% a year for 100 years. And I said, what if you would have bought all the Dow stocks on margin 100 years ago? How much money would you have? Everybody pulls out a calculator, and the answer would be zero because you'd be broke. Even with GE still there, because if you bought them on margin, everything would be gone. And it's a little more complicated than that, Glenn, because some of the stocks merged and got bought by other companies, so it gets very complicated. But you'd still be basically broke, yeah, because all the companies of the Dow have, for the most part, folded or gone out of business. The Dow itself, though, is actually a mutual fund. They keep changing what goes in the Dow, so it's a mutual fund that puts the best foot forward of our country, which is why it's quoted all the time, right? Any quote you hear on the news, the evening news, is always the Dow, right? Dow's up this, Dow's up that. That's because that puts our best foot forward. It's not necessarily representative of the broader market. It's just 30 stocks, but that's what we use. But you should never use it for your market analysis, never. To use this platform, what platform? The trading room is a trading room. It's not your platform. You need to get hooked up with a broker, which you would have to research and decide what you'd want to do, and that broker would either have or give you options for the charting package you would use. And if you're day trading, you have to have $25,000 as a day trader, or you have to go with the proprietary trading option. If you want to find out about that, you can email me asking about the proprietary trading information, where you can day trade with as little as $5,000 using a $50,000 buying power amount. And then, so I mean, that's the minimum you have to have. Just start with the minimum, it's fine. And besides that, when you start, I mean, again, I recommend no matter what you're doing or what you're learning or how you start off light until you've proven you're making money. All right, I think it's time to call it we spent an extra hour here just talking and goofing around, which was fun because I felt like it tonight. I had nothing to do. So Thanks for coming, everybody. We'll see you sometime middle next week. We're going to get together, and then we'll see you a week from Saturday for coffee with Paul. Have a good night, everybody, and you'll get a couple emails from me too, at least by Sunday at the latest. Have a good night, everybody.